Trends drive the market. Following them is the most intelligent way to amassing wealth. I'm Tom Goolsby, and you're listening to chartingwealth.com. It is good to have you with us. We're looking at how this week is starting out. Now, first warning, this is the summertime trading zone. You remember how wonderful the market was during this last fall-winter trading zone, and I kept telling you, this time is coming to an end as we hit those hot months. It's that sell in May and go away, live to trade another day. That is a market adage that you hear all the time, particularly this time of year. Why is that? Why year in and year out is it this way? It's this way because a lot of the volume leaves the market. It happens every summer. People go on vacation, big money steps out. That means that we go from a big ocean to a little fish tank, where you can drop a rock in and water splashes out. That means with a lot less volume, less things can move the market, and it gets herky and jerky. It goes up, it goes down, it goes sideways. It's much harder to chart. So what do? We continue to practice. We practice every single day. We follow trends. We learn the different trading zones. We pay attention to what's going on in the market, and where there is something that occurs and the charts just soar up or down, that's when we are ready to pounce and jump in. That's why we follow our weekly vertical crossovers. We follow the market every day. We look for trends to set up. The 2-day and the weekly moving in the same direction, and a pullback on the 4-hour and a recross, and the ability to jump in to successful moves. You can even do that at times in the summertime trading zone. So continue to chart, continue to pay attention. It's not the most exciting time of the year, but it's an important time to practice. If you don't have our book, it is available. Look at the link in the show notes. If you want to be a Patreon supporter, please do that too. We appreciate all of you being here. Let me tell you another thing I'm going to start doing, because I'm getting overwhelmed with questions by you guys. I appreciate them. I try to answer them, but it is so hard to answer all of them, and a lot of them are the same questions, and I do try to address them here on the show, but I'm going to start doing a once every week, once every other week. I'm going to do a Q&A, just a broad one for the questions that you all email me. I'm going to go through the list and answer those for you. So start looking for that. Probably going to start doing that maybe on Tuesday, maybe on Wednesday or Thursday. It's going to be a separate broadcast. And if you're not already a subscriber, I'm going to send it out to our subscribers only. I don't think I'm going to be posting it. So if you want to receive that, go ahead and make sure you go to chartingwealth.com, sign up for the daily email. We do not spam that list. We do not share that list. That is our list. Give us your email address. We'll put you on that list. You'll get the daily review every day, also the weekly review, and then you'll get that question and answer series also. So go there, subscribe, chartingwealth.com. Let's jump into this market. We see bonds and stocks up for the day. Gold down. Let's first jump into the S&P 500. It was actually flat right toward the end of the market for those of you that were looking. Ended the day up just a little bit, 0.06%. We look at what's going on the weekly chart. It's about where it was the prior week as far as where it topped off. About the same spot, somewhere around the $289.44 spot. So it's right about where it was. Still a confirmed move. Price percent oscillator is heading up. Still below the red trend line red signal line. We see that the price percent oscillator, again, still negative. Derivative oscillator losing downward momentum. We shift from the weekly to the 2-day. What do we see going on there? Well, the 2-day has, it's in the first day of the latest 2-day candle. It finished drawing the last full candle on Friday. This candle is just the first day, but it is pushing through quite strongly. We can see that we had a crossover back on the 2-day candle ending Wednesday the 12th. And again, we can see that sideways slide where it's not topping any higher. It's just moving sideways. So derivative oscillator is gaining momentum. Price percent oscillator heading up. We go to the 4-hour chart and look at this. It's been going sideways since it topped all the way back on Monday, the 10th of June. So we just have a long sideways slide, up some in the morning, down some in the afternoon. 4-hour chart, it does appear to be getting close to crossing over, going down. So maybe after that bump up, the market's going to move over and head down. Don't know. We'll pay attention and see what there is to see. Can't call it yet. I can just see what's on these charts. Let's go from stocks, from the S&P 500, that is sort of broad overall market, big, huge international stocks, to the tech stocks on the Qs, which is the NASDAQ 100. It also, now again, S&P up 0.06%. The Qs, the NASDAQ 100, up 0.60%, so up more. But again, we can still see a sideways slide underway. And we see on the weekly chart pretty much flat. So there's more downward pressure, it appears, when you look at the price percent oscillator on it still than the S&P 500, even though it was up more for the day. Derivative oscillator losing downward momentum. And we go from the weekly to the 2-day. Again, just the first day of the latest 2-day candle, but we can see that we did have that 2-day crossover back on Friday and a green up candle for the day. We go from the 2-day to the 4-hour, and that again is where we see that slide. It was the 11th where the Qs topped off, not the 10th like on the S&P 500. And again, still below where it topped on the solid box green candle back on Tuesday morning, the 11th. So again, a sideways slide. And again, just sort of flat on the price percent oscillator, and the derivative oscillator sort of green at the end of the day. So again, just waiting to see what's going to happen. Are things just digesting, getting ready to charge up higher, or rollover going down? We don't know. We trend follow. We'll let the trends show us. Next, we go to 20-year bonds. What do we see there? Up 0.14% for the day. Again, 0.14%. We see that the price percent oscillator on the weekly chart still going up. Derivative oscillator gaining upward momentum, starting the week off with a green up candle, but not pushing higher all the way back to 2 prior weeks, not getting higher than that yet. So again, some significant slowing there. Look at the 2-day chart, and we can again see a sideways slide. On the 4th of June is where we saw bonds top out and have sort of been sliding sideways since then. Price percent oscillators about flat. Derivative oscillators continuing to lose momentum. And we look at the 4-hour chart. What do we see going on the 4-hour chart? It is continuing to move up. Again, hasn't crossed over yet going up. Keep hoping that it will. Why? Because it'd like to jump into an up move. But again, not strong enough yet to do that. And of course, we like to have the derivative oscillator, which moved over a day and a half ago. We like to see the derivative oscillator and the price percent oscillator cross at the same time. Typically means a better, stronger move. That's not happening. So continue to keep your eye on bonds. See if it gives you an opportunity to jump in over the day on Tuesday. Maybe stocks will start rocketing down, which typically means bonds might be rocketing up. Who knows? We'll wait and see. We can always wish. We just don't act without trends to support us. Okay, what do we see going on gold? Gold down just a little bit for the day, 0.06%. We see a green up candle forming for the week. Derivative oscillator gaining momentum. Price percent oscillator heading up. That's good. We go to the 2-day chart. We can see price movements above the 2-day trend line. Derivative oscillators lost a little bit of energy. Price percent oscillator still heading up. And of course, lastly, we go to the 4-hour chart. What's going on there on gold? Just won't cross over going up and give us a jumping in point, will it? Just won't do it on gold. Down throughout the course of the day on Monday. Maybe the derivative oscillators continuing to lose downward momentum. Maybe at some point soon, gold will cross back over and give us a jumping in point for an up move. But again, don't get upset. The charts don't have to do what you want them to do. You just need to follow the charts. Pay attention to them. Let them guide you. If you've not supported us by buying the book, please do so. You'll see a link in the show notes. If you live overseas, I am back from my traveling, and I will get those invoices out to all of our overseas folks who want to buy the book. Just email us, cw@chartingwealth.com. We'll send you an invoice through PayPal. And we got in today, fresh copies of the book, printing number 11. I've been autographing like a maniac today. So we'll get you your autographed book out to you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.